18.
Stocks in focus. The first tick is absolutely flat right now. The Sensex, Nifty and the mid-cap index are very, very quiet.
We opened up a bit. We had a gap, or we had a slip from the top, and then once again the markets in the last 1 hour have started climbing higher.
Nifty at the day's high right now, 78 points higher on the Nifty right now. But a lot of action is what we are seeing in the broader markets.
Starting the week actually with a 100-odd point gain. And the thing is, it's been remarkably stable right from the word go. So the Nifty in a way has been knocking at that 18,300 all day today. We're going to end up 100 plus points in the green. So 18,310 is where we will kind of make our stand at 3:30 today.
Well, it's been a good start to the trading week with the Nifty ending about 100 points plus higher, a little over 18,300. And we saw the Nifty Bank, though underperforming some other key indices, coming to the support of the frontline index. You're watching us here on Markets Today, the show where we tack 6 hours of trade in 5 headlines. Let's talk about those headlines itself. The stock markets start the week on a positive note. Sensex gains over 230 points, the Nifty over 100 points, the mid-caps outperform, and we had more stocks advancing than declining. The window to exchange 2,000 rupee notes at banks opens tomorrow. RBI Governor advises people not to rush to banks. He adds that he cannot speculate what will happen once the deadline for deposit and exchange ends on the 30th of September. Says the next course of action will depend on the number of notes that return. Also says the impact on the economy will be very, very marginal. JSW Steel rallies over 1.5% on a stellar fourth quarter set. The steel major reports a beat on all fronts, margins coming closer to 17%, much higher than street estimates of 14%. The company's net debt also reduces in the fourth quarter. Siemens India slides after a move to hive off its low voltage and geared motors business for over 2,200 crore rupees to its own parent, and that raises questions around likely undervaluation and corporate governance issues. NTPC rallies on net profits, beating street estimates. Muthoot Finance surges over 8% on a strong set in the fourth quarter, whereas Divi's Labs gains over 5% despite an all-round miss as brokerages upgrade their EPS estimates. Glenmark, on the other hand, falls as their net loss widens. Balaji Amines was the stock of the day, tumbled over 6%, actually recovered over 7% from the lows as well on a poor set of numbers, resignation of independent directors, and thereafter the resolution for that. All right, with that, let's talk about the stock markets itself. The market started a week on a positive note. We had the Sensex gaining over 200 points, the Nifty also over 100 points, knocking at the doors of 18,300 through the course of the day and eventually ending above that as well. The Adani Group stocks, they lifted sentiment with Adani Enterprise being the top Nifty gainer by a huge margin, over 18% gains, locking in the upper circuit for the temporary freeze for that stock. Financials, however, underperformed. 44,000 on the Nifty Bank seems to be a bit of a resistance, but the market cap of BSE listed companies rose to nearly 280 crore rupees, and this is the highest that we've seen in the last 4 months, 280 lakh crore rupees that is. Surabhi Upadhyay joins in with a wrap of the day's trading action. Surabhi.
Well, a good start to the week by the bulls, with the benchmark indices managing to put on a gain of 0.5%, if not more. What also stood out was the fact that the excitement and enthusiasm was back in the mid-cap market today, with the mid-cap index actually outperforming the Nifty by a slight margin. We also had pretty decent market breadth for pretty much the entire session. The only problem area was really banking. The Bank Nifty was underperforming throughout, but even towards the afternoon, even the Bank Nifty decided to cut its losses, so marginal negative on the bank index. I'll start with some of the Nifty gainers, and the Adani Group really stood out when you're talking about the gainers tally. Whether it was names like Adani Ports or Adani Enterprises, which was up about 18%, some of the other names like Ambuja up 5-6%, there was a huge rally playing out on the Adani stocks. Beyond that, some interesting reactions in the large cap arena in terms of earnings. Divi's, for instance, was one of the clear winners today, with a 5.5% up move. A lot of the technology names like Tech Mahindra, HCL Tech, etc., they continued to see accumulation, which was a trend that continued from last week. So pretty good out there. As I said, the only disappointment really was banks. So your names like Axis Bank, ICICI Bank, most of them stood out or sat out of the rally today. That brings me to the mid caps, and here it was a day of outsized moves. Lots of them on the way up and plenty on the way down as well. So when I'm talking about the way up, let me actually highlight some names over here. Muthoot, for instance, was reacting to numbers and was quite smart throughout the session, 7 to 8% higher. You had other names like Dixon, which had lots of accumulations signed. Some of the names from the electronic manufacturing space like Syrma SGS were quite interesting to look at as well. All of them flying between 7% to 8, 9% in some cases. However, stocks that stood out for the wrong reasons included Siemens and a Balaji Ameen. Siemens more so because Siemens is doing a transaction where it's carving out a part of its business here in India and the listed entity and moving it to the global parent, and the market seems to have a lot of problem with that. The stock has lost almost 13% in a span of 2 trading sessions, and severe dropping continued today. Of course, Balaji Ameen's was a case that stood out where there were a couple of resignations at the management level, weak earnings, so we had a pretty significant downside moves. All in all, a pretty decent start to the week, with the action being more about individual movers and shakers.
Individual indeed, a bunch of them actually moving around. Surbhi, thanks a lot for that. So let's get you some market opinion. The moves happened a lot on account of earnings, and Vineet Sambre of DSP Investment Managers does believe that the market is reasonably priced in terms of valuation, but may be impacted by global volatility. However, he says that earnings so far have actually been a little better than estimates, if not in line.
The markets may be reasonably priced in terms of valuations, but we should, I think what we are also trying to sort of keep in mind is that we will have some of these macro news flows which are going to keep the overall upmove in check as well. Whereas, as I anticipate the earnings momentum to start accelerating gradually over the next 1 or 2 quarters, will also mean that we don't see a lot of downside when it comes to India, specific earnings factor. So I would say that all in all, I believe that while valuations are reasonable, all these volatility, the global volatility around recession and all may likely keep some of these upsides under check.
Right, with that, the second headline and the headline of the weekend, actually, Reserve Bank Governor Shaktikanta Das has advised people not to rush to banks even as the window to exchange or deposit the now withdrawn 2,000 rupee notes opens tomorrow. He has urged people to take their time as there is a 4-month window. Speaking to reporters in Delhi, the governor said that the September 30th deadline is only to streamline the process, added that the note will continue to remain legal tender. However, he also added that he did not want to speculate on the fate of the note itself post the deadline. He said that the next course of action will depend on the number of notes that return. The governor said that the RBI will be sensitive to issues and challenges faced by people. Governor Das also asserted that the impact on the economy due to this withdrawal will be very, very marginal.
You have also raised the question after 30th September, what? Now we expect most of the notes to come back. That is our expectation at this stage. We will see how much notes come back. And as we approach 30th, we will decide, at that stage. And the legal tender character, we have said that it continues. We have not said that, this will happen or that will happen. Let me assure the people who are abroad, the people who are now in the foreign countries, and let me assure people who are within India, कि जो भी कठिनाइयां आप फेस करते हैं, we will be sensitive to that.
All right, let's go across to Lata Venkatesh, who joins us now to explain how this exercise by the Reserve Bank of India is different from demonetization. In fact, Lata, everyone's confusing this with demonetization. Can you tell us? It's totally different, right?
Why there won't be too much of worry this time? The amount of notes being withdrawn today has a total value of 3.6 lakh crore. And in 2016, the total value of the notes withdrawn was 15.4 lakh crore. It was 85% of the notes in use. This time it is just about 10% of total currency value in use. The other big difference, now 4 months are being given to withdraw. At that time, there were only 2 months given. At that time, there were a lot of identity details that you had to give, because it was clearly to, remove black money. So those who were stashing, details were asked. Now, no details. If you have money, you just go and you can exchange it. The idea of only 10 notes at a time is because a bank branch may have only that much cash at any point in time, and everyone should have a fair chance. So at a time, it's only 10 notes per person. But you can go any number of times to any number of branches. Though I'm not quite sure so many people have so many 2,000 rupee notes, except perhaps some very, very supremely rich people. Now, impact of this on the system. The first place, you can already see the impact on the bond yields. The interbank call rate, that is one-day money, which banks borrow from one another for immediate mismatches in their currency, that has already fallen by about 5 to 10 basis points. So have the short-term yields, and even the long-term. The 10-year fell a little, but it's corrected. The initial reaction was to dip lower. What are economists telling us? Now, there is a range of expectations because no one knows how the customer or how the consumer will behave. On the one end is Citi, which says that they expect only 5 to 10% of bank deposit to increase substantially because they feel people will come and exchange. After all, why did they keep the currency as currency? Because they wanted it as notes. So people will take back smaller currency and very little will be permanently deposited as bank deposits. They expect that a lot of people who are hoarding cash don't want the banks to know, the banking system know that they're hoarding cash. So they may perhaps spend it as jewelry. There is an expectation that consumption will go up of high value consumption goods like jewelry. And the Monetary Policy Committee, which will meet on June 8th, will now perhaps not change its stance. It was widely expected that they will remove the stance of withdrawal of liquidity. Where is the liquidity? After all, there was tight liquidity in the banking system. So the expectation was they'll change the stance. Now they won't change because liquidity is coming back to the system. That's Citi's expectation. On the other end is the Kotak expectation, which is that maybe 1.5 lakh crore will come back and stay in the system and get gradually removed. So immediately there will be flush liquidity and yields will be lower. More importantly, bank margins can improve because they don't have to raise deposit rates. So their margins will be as good as the fourth quarter. And here, the Kotak economist who passed now also, like Citi, Samiran believes that there could be some consumption of high-value goods like jewelry. We also spoke to the Goldman Sachs economist. He also believes only short-term yields will go down. There shouldn't be any impact on longer-term yields because this is a low-value impact. So to put it all together, short-term yields go down. The monetary policy may remain in a withdrawal accommodation mode for some more time. Expect jewelry sales to pick up.
All right, we will expect jewelry sales to go up, Lata. Thanks a lot for that. And you spoke about some supremely rich people. I wonder who they are. But let's move on to the third headline of the day. JSW Steel rallied over 1.5% on an all-round beat coming in the fourth quarter. The margins were a big beat at closer to 17% versus expectations of around 14% itself. The company's subsidiary also performed well. Nigel D'Souza joins in with the key numbers and the rationale why the stock is moving higher. Nigel.
Well, JSW numbers were good, in fact. If you look at the top line as well as the operating profit, was much better than what we were working with. A few factors that played out here. The standalone business, which is effectively the erstwhile domestic business without any of those acquisitions that they've done, well, that did well. The EBITDA per ton out there came at around 11,000 rupees, which was the 800 to 900 rupee beat in comparison to what we were working with. But the bigger beat came in from the subsidiaries. Both the domestic-facing names, that's the likes of Bhushan Power and Steel, as well as the coated steel asset, both of them saw good improvement on a sequential basis. And the overseas business, if you're looking at Baytown or you're looking at Ohio, as well as the European business, all of them reported a very, very good set of numbers on a sequential basis. Now, the debt number, well, that came down by close to around 10,000 crores because the working capital release, which they promised, that did come about. Going ahead, though, things could be a little bit sketchy because pricing is a little bit weak, and the management says that coking coal costs will go up by around $10 to around $15 in quarter one in comparison to quarter four. In fact, let's hear out what the management had to tell us earlier today.
We had guided a flattish coking coal price from quarter three to quarter four. In the quarter three, it was $280. In quarter four, it was $274 CFR India. We expect increase of about $10 to $15 in coking coal going into quarter one. However, I think the margins will remain by and large stable, primarily because of the coking coal cost starting to flow through from June into July, September quarter. We expect that the EBITDA per ton for the first half, it may be marginally lower in the quarter one. Steel prices have held steady for the months of February, March. Post that, there has been some correction in the international markets, driven by a subdued sentiment in China, higher exports from China. So we have seen the international prices of steel come off somewhat. It is following in the raw material prices as well. So there has been a price correction in the month of May. Already we have seen about a 25 kind of dollar drop in the prices as we speak in the month of May from where we were in the month of February, March.
All right, that was the management of JSW Steel and the numbers. With that, we'll slip into a short break, come back on the other side. We will talk about all the other headlines that we're tracking.
RR Kabel presents CNBC Awaaz Real Estate Awards, 14 years of excellence. To nominate, visit realestateawards.co.in or call.
Presented by RR Kabel, associate sponsor RR Parkon.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
Zedlak Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
Welcome back. You're watching us here on Markets Today. We're talking about all the things that move the markets today. We spoke about the markets itself, the RBI direction of withdrawing 2,000 rupees in terms of circulation, the notes, and the JSW Steel stock. Let's talk about the fourth headline today. Then Siemens India, that tumbled almost 10% after the company approved the sale of its low voltage motors and geared businesses for about 2,200 crore rupees to its parent. And this is the second time they've hived off a business and sold it to the parents, and as a result of which brokerages are worried about the corporate governance issues itself. What are those issues and what are the brokerages making of this? Vivek joins in with the details. Vivek.
Well, a very sharp reaction came in as far as Siemens India was concerned. Remember, in the dying minutes of trade on Friday, the company informed the exchanges that it is going to go ahead and sell its low voltage and geared motors business to its parent entity, that is Siemens AG. Now, this particular sale consideration was pegged at close to 2,200 crore, which implied a valuation of 2 times FY22 sales for this particular operating entity. Now, what was the rationale for this particular deal? Siemens AG globally has gone ahead and consolidated all of the low voltage businesses that it operates across different geographies, and it plans to put it under one single operating arm. Now, after that, what they intend to do is that they intend to either go ahead with an IPO or bring in a long-term strategic partner for this particular business. Also, remember, the deal will now require minority shareholders to go ahead and approve. Company also has said that post receiving the consideration for this particular deal, there will be a special dividend that will be distributed as far as the shareholders are concerned. So what explains the stock price movement? Now, number one, it is a related party transaction. Number two, the valuation at which the deal has been done at is something that analysts are not happy. Now, when you're talking about Nomura has immediately said, number one, they have downgraded their rating on the stock to reduce from neutral. What they're saying is that concerns have arisen on the fairness of the valuation of the business being sold to the parent. Haitong has said businesses carved out from the company always is a concern amongst investors. UBS has said that the low valuation implied for the motors business, given the fact that there were very good growth, profitability, as well as cash generating opportunity for this particular business. In fact, a fair valuation that was being done by UBS themselves implies that this particular deal could have been done at 6,000 crore versus the 2,000 crore that Siemens has actually given itself. Now, lastly, Nuvama says that this particular deal puts the minority shareholders at a disadvantage. But taking into account all of these factors, the stock definitely has seen quite a bit of a sharp correction from its recent top.
Sharp correction indeed, Vivek. Thanks a lot for those updates. Let's talk about the fifth headline. A bunch of other stocks that were buzzing around on account of earnings. Remember, it's the fag end of the earnings season, so we do get a lot of them and a lot of reactions as well. Let's talk about NTPC. That was buzzing despite a mixed set of fourth quarter numbers. Net profits came in at 5,600 crore rupees, beating street estimates of over 4,700 crore rupees. However, the company reported a miss on the revenue as well as margin. So, Vivek, you're still with us. Tell us the key numbers of NTPC.
Well, NTPC delivered a mixed Q4 as far as its quarterly results were concerned. Very importantly, what are analysts on the street anticipating? The analysts wanted to hear from the management regarding the fate of the stake sale or the IPO as far as its renewable energy arm was concerned. Now remember, management had earlier said that at the end of FY23, they would be going ahead and selling a stake or going ahead with an IPO for the renewable energy arm. Management assuaged investor concerns and said in the conference call later that yes, they would be looking at this particular IPO or a strategic stake sale as far as the renewables arm is concerned. Now talking about the numbers themselves, it's been a mixed quarter. Revenues slightly below, EBITDA slightly below. Profitability was well above what analysts were anticipating. Duwama says that the profitability beat came in as far as higher efficiency earnings kicked in as the core ROE or the return on equity of the company grew to 18% for Q4 as well as the FY23. Now, when it comes to NTPC, the key figure to watch out for is the capacity addition pipeline that the company has in store. So when it comes to thermal capacity addition, NTPC is aiming for 4.6 gigawatts in FY24. But clearly, this is eclipsed by the very strong capacity addition plans that it has as far as the renewable energy arm is concerned. Renewable energy capacity addition planned at 16 gigawatts between FY24 to FY26. This is something that analysts on the street are clearly tracking out for. This, along with the stake sale in the renewable energy arm, is something important to track as far as NTPC is concerned.
All right, some more earnings that came today. Balaji Amines opened about 12% lower. Thereafter, ended the day with about 6% in terms of cuts. Recovered a fair bit from the lows of around 1880 in today's trading session itself. The reason why it fell was, one, the numbers were weak. Secondly, 4 independent directors of the company resigned. Thereafter, the recovery that happened was largely on account of the reasons why the independent directors resigned. We had a comment coming in from one of the independent directors itself saying that this was more regulatory in nature and nothing amiss with the company. So as a result of which, we saw a recovery in the stock. But the 6% decline, of course, was on account of a near 40% decline that we saw in the company's revenues and EBITDA this quarter. Sonal Butra joins in with the key numbers. Sonal.
Thank you so much for that. Well, first up on the results, it was a weak set, no two ways about it. It was a revenue decline of 40%. Sequentially, also the numbers looked weak. The EBITDA was down 40%, margins at 38%, and profits declined by 58% for the company this time. Now, company said this fall in margin was primarily because of the weakness that they've been seeing in pharma and agrochemical space, something that the company has been saying for quite some time. But the important point was there was an expectation of a recovery in Q4, which did not come through. They said that they anticipate a return to growth and margin levels similar to those achieved before COVID-19. Remember, COVID-19 was a period of heightened realizations because of the way prices moved higher and volumes also coming in higher from the pharma segment. They say they experienced high realizations during COVID, and that is not something they can replicate in the future. The capex that they had planned, that is according to the normalized realizations, and that will not impact the future guidance on revenues as well. They say revenues from the new commenced plans will be coming in and contribute to their top line very soon in FY24 as well. The second set of news is that 5 independent directors have resigned and the CFO has resigned as well. But the independent directors, 4 of them resigned because of a SEBI rule, because any independent director can be on the seat only for 10 years. That is basically 2 consecutive terms of 5 years. Post that, they have to resign, and that is exactly what they did. CFO has been replaced by Mr. Srinivas Reddy, who is also a part of the promoter group. That is what the independent director told us. In terms of management commentary, they said that from Q2 of FY24, they'll start seeing some improvement in margins, and this is something that they're bullish on as well. Pharma and API industry has been undergoing some pressure, which they expect to reverse, and they should see a 5 to 7% growth in volumes in coming months or in FY24. So that is the management commentary, and the stock in focus on the back of that.
Right, and finally, let's talk about Muthoot Finance as well. That was the other stock that rallied about 8% on their strong fourth quarter profits that came in at over 900 crore rupees. Marginally missed street estimates, but what was good was gold loan disbursements at around 61,875 crore rupees, up 7%. But the management guided for 15% growth going forward as well. Abhishek joins in with more on Muthoot Finance. Abhishek.
Well, gold loan is shining for Muthoot Finance, especially in Q4 FY23. So overall AUM growth is around 8.9% YOY and about 9.5% sequentially. In that, the gold AUM growth is about 7.6% YOY and about 8.9% sequentially. One of their subsidiary, that is Belstar MFI over there, the gross NPA ratio is down to 2.43% when compared to 7.4% in the previous quarter, which is a decline of nearly 500 basis points. Home Finance, another subsidiary, saw weak AUM growth despite disbursements being strong. Revenue and PAT were weak for Home Finance on a YOY as well as sequential basis, but no taking away from the fact that overall the net interest margin has expanded to 12.26% when compared to 12.21% in the same quarter last year and about 11.86% on a sequential basis. So the net interest income growth was about 7.7% YOY and about 8.7% sequentially. The profits were down 6% YOY and up almost 0.1% sequentially. Investec has written on Muthoot Finance. They have upgraded the rating to hold from sell. They have increased the target price to 1100 from 1000 earlier, and they have also upgraded their EPS estimate for FY24 as well as 25 by 10 to 9% on the back of strong AUM growth that Muthoot Finance has seen. Back to you.
All right, and let's stop that with a bunch of pharmaceutical stocks which were in focus. Glenmark Pharma was one of them, tumbled close to about 3% after its net loss widened to over 420 crore rupees versus 155 crores the same quarter last year. Meanwhile, Divi's Labs was also another stock which surged over 5% despite reporting a big miss on the margins. Ekta joins in with a wrap of all these key numbers. Ekta.
Hi, thanks for that. Well, I'll start with Gland Pharma. You know, the stock is down today as well. Remember that it's corrected significantly, almost around 70% from its 52-week high. Morgan Stanley has downgraded the stock post its numbers to equal weight with the target price of 1,035. The downgrade is in view of a worsening injectable CDMO industry dynamic, uncertain outcome from customer contracts, distant benefits from strategic initiatives. They've cut the FY24-25 EPS estimates by over 30% respectively as well. Glenmark, the numbers were largely in line. So revenue was up around 11.5%. US sales came in at $104 million versus estimates of $100 million. Margins close to around 18%, which was in line with estimates. But there was a one-time loss on account of settlement or related to a drug, Zetia generic. There were remediation costs which were undertaken this quarter. It is expected to taper off going forward. India was down around 6.4% on a year-on-year basis, but that was on account of multiple factors such as the NLEM cost revision as well as COVID-19 base. What probably disappointed the street the most was the gross debt, which was higher on a year-on-year basis. The company, however, has said that they are looking to reduce debt in the next 3 odd years. Remember that the stock has also seen a strong run-up, so that's probably another reason why you're seeing that profit booking come through. Divi's Labs, the Q4 numbers, the revenue was better than estimates. The margins also recovered Q-on-Q, but the margin recovery was lower than what the street had anticipated. But the commentary seemed to be positive. They expect gross margins to recover towards the year-end. The company has shown Q-on-Q growth in key segments such as custom synthesis as well as the generic API segment. And the company has said that they have 2 custom synthesis projects which should start generating revenue. Jefferies has upgraded the stock to buy from underperform, and HSBC has upgraded the stock to hold from reduce as well, possibly on the fact that these brokerages do believe that maybe the worst is over.
All right, Ekta, thanks a lot for that. With that, we're out of time on this edition of Markets Today. Stay tuned to CNBC-TV18 for all the other news and updates. Thank you for watching.